The global economy is racing with an artificial intelligence frenzy driven by huge investments in the technology. At the end of last month, AI giants NVIDIA became the first company ever to worth $5 trillion. That's more than the GDP of every country on earth except for the U.S. and China, according to World Bank data. That same company announced billions of dollars of investments in Intel this summer, and Intel is causing concern here in Ohio as construction delays at its Central Ohio location continue. All of this money movement is also raising concerns that the economy is sitting on a so-called AI bubble that, if popped, could send it into a tailspin. Some big investment names are denouncing those concerns, and Lauren is sitting down asking questions about what it all means for the economy. Lauren.
Thanks, Jack. We're joined now by Vincent Russell, the Principal Managing Director of the Dayton market with the Johnson Investment Counsel. Thanks for being with us, Vince.
Thank you, Lauren.
Tell us a little bit about what a bubble in the global market is and what the consequences can look like.
Sure. Well, I look at a bubble as being a run-up in prices, and typically the run-up in prices of assets like stocks, which Jack just mentioned, NVIDIA. Prices can also be related to real estate prices or commodities. And a lot of this run-up is typically due to a lot of hype. A lot of people fear as if I missed out on something, I've got to get it at no matter what price it costs. And a lot of that hype and enthusiasm, we could find ourselves there today.
So is this something that's happening with AI investments, and what do you think will it pay off?
Well, I do think there has been a tremendous amount of investment in AI. The AI idea is a transformational thing. It is certainly something that is hitting every part of our economy today. And yes, I do think it will pay off, but when? Right? We're seeing a lot of activity now, but people have to have patience. And when I say people, I mean investors who are looking at AI right now, investing in companies like NVIDIA, Microsoft, Google, and things of that nature. And things are feeling a little bit expensive.
We're hearing it compared to the 90s internet bubble. What's alike and what is different with that? Sure.
I think there are differences for sure. In the dot-com era, the late 90s, March of 2000 is when that NASDAQ peaked and the bubble, you could say, burst. The stock market took a traumatic turn for a loss. And so as I sit here today, back then the internet was that thing. It was the World Wide Web that was being built out, the infrastructure, the fiber optics was all being laid. But things were happening pretty quickly. Here, I think there are differences with artificial intelligence in that we have a lot of powerful computing, cloud computing. We have faster processors today. The infrastructure feels a little bit different. So I do think we are better positioned today to see the follow through. That doesn't mean we're not going to see prices correct in some of these companies that we've just talked about.
We've got about 30 seconds left. What does it mean for the everyday investor, the person sitting out there watching?
I would say be sure of what you own. A company like NVIDIA can be an individual stock that an investor owns. They can also own it in a mutual fund or an ETF in their 401k. So I would caution folks to really take a good look at, do you own NVIDIA in 3 or 4 different places, which could be an over-concentration, which brings on undue risk.
All right.
I would be very careful about that.
Okay, Vince Russell, thank you so much for joining us. Very sound advice there.